What is happening, crypto crew? Welcome back to Bitcoin Bulletin, your ultimate source for the pulse of the digital asset world. The markets are absolutely electric, and if you're not plugged in, you're missing out on the seismic shifts happening right now. We've got breaking news that could redefine your strategy, so buckle up because the pace is relentless, and you need to hear these updates before anyone else. Today, we're diving deep into a tactical rotation in the crypto space that's got everyone talking. We'll uncover why major players are making moves and what it means for your portfolio. Plus, we're dissecting a major trend that positions Bitcoin as a critical defense against traditional currency devaluation. You do not want to miss this. And if that wasn't enough, we're exploring the fascinating sentiment signals that could be pointing to a contrarian opportunity. Finally, we're looking ahead to a potential game-changer for Ethereum in 2025, drawing parallels to a historic Bitcoin moment. It's all happening fast, so let's get straight into it. Make sure you smash that like button, subscribe, and hit the notification bell so you never miss a beat. Bitcoin whales make strategic moves, Ethereum sees rotation. Big players in the crypto world are making significant adjustments to their portfolios, signaling a potential shift in market dynamics. Recent analysis reveals that major Bitcoin holders, often referred to as whales due to their substantial holdings, have been actively taking profits. This profit-taking activity suggests a strategic rebalancing or a move to secure gains after recent market upticks. This trend is particularly noteworthy as it coincides with a noticeable rotation into Ethereum. This rotation implies that capital previously deployed in Bitcoin might be migrating to Ethereum, possibly in anticipation of future growth or due to perceived value opportunities. Such movements by large holders can often precede broader market trends, as their actions are typically based on extensive research and a keen understanding of market sentiment and upcoming developments. The specifics of this profit-taking strategy are complex. Whales are not simply selling off assets, they appear to be executing calculated maneuvers. This could involve diversifying into other assets, hedging against potential downturns, or repositioning for new investment cycles. The sheer volume of Bitcoin being moved by these entities indicates a deliberate strategy rather than a panic sell-off. It's a sign of sophisticated trading and portfolio management at the highest levels of the crypto ecosystem. Simultaneously, the increased interest in Ethereum suggests a growing confidence in its ecosystem and future potential. This could be driven by ongoing upgrades to the Ethereum network, the expansion of decentralized applications, dApps, or the increasing adoption of its native token for various financial services. The rotation is not just about moving from one asset to another. It represents a potential reevaluation of risk and reward across the digital asset landscape. Market observers are closely watching these whale movements. Historically, significant whale activity has often preceded major price movements. Their ability to influence the market stems from the sheer size of their holdings, meaning their actions can create ripple effects throughout the ecosystem. The current dynamic suggests a period of strategic repositioning, where established players are adapting their holdings to optimize returns and manage risk in a rapidly evolving market. This tactical shift highlights the maturity of the crypto market, where sophisticated strategies are becoming increasingly common. It's no longer just about holding, it's about active management and tactical allocation. The interplay between Bitcoin profit-taking and Ethereum rotation provides a compelling narrative about where smart money is flowing and what underlying factors are driving these decisions. The impact on the broader market is significant. For retail investors, understanding these high-level strategies can offer valuable insights into market trends and potential opportunities. It underscores the importance of staying informed and adapting investment strategies in line with evolving market conditions. The actions of these whales are a clear indicator of a market that is constantly in flux, rewarding those who are attentive and agile. Hold on tight, because the implications of these whale movements are just the beginning of our deep dive today. Next, we're going to explore how Bitcoin is increasingly being seen as a vital safeguard against the erosion of traditional currencies. Bitcoin emerges as a crucial hedge against fiat devaluation. In an era marked by persistent inflation and economic uncertainty, Bitcoin is increasingly being recognized not just as a speculative asset, but as a potent hedge against the erosion of traditional fiat currencies. This perspective is gaining significant traction among institutional investors and financial analysts who are seeking tangible solutions to preserve wealth in a landscape where the purchasing power of government-issued money is steadily declining. The core argument for Bitcoin as a hedge lies in its inherent scarcity. Unlike fiat currencies, which central banks can print at will, leading to inflation and devaluation, Bitcoin has a hard-coded supply cap of 21 million coins. This fixed supply ensures that its value cannot be diluted through arbitrary monetary policy decisions. As more fiat currency enters circulation, the relative scarcity of Bitcoin increases, potentially driving up its value. This unique characteristic positions Bitcoin as a digital store of value, akin to gold, but with the added advantages of portability, divisibility, and verifiability through blockchain technology. As global economies grapple with rising debt levels and quantitative easing programs, the appeal of an asset with a predictable and limited supply grows stronger. Institutions are increasingly allocating portions of their portfolios to Bitcoin, viewing it as a strategic diversification tool to mitigate the risks associated with traditional financial systems. The narrative of Bitcoin as a hedge is further bolstered by its performance during periods of geopolitical instability and economic downturns. While volatile in the short term, its long-term trend has shown resilience and growth, particularly when contrasted with the performance of major fiat currencies. Investors are drawn to its decentralized nature, which insulates it from the direct control and potential manipulation of any single government or central bank. This institutional embrace is a pivotal development. It signifies a growing acceptance of Bitcoin within the mainstream financial framework. Major financial institutions are not only investing directly, but also developing products and services that make Bitcoin more accessible to a wider range of investors. This increased accessibility and institutional validation are reinforcing its status as a legitimate asset class and a viable hedge. The implications of this trend are far-reaching. If Bitcoin continues to be adopted as a primary hedge against fiat erosion, it could fundamentally alter global financial strategies. It suggests a potential recalibration of how nations and corporations manage their reserves, moving beyond traditional gold and currency holdings to include digital assets. Market sentiment is increasingly reflecting this view. Analysts point to the growing correlation between inflation rates and Bitcoin's price movements, suggesting that investors are actively using Bitcoin as a protective measure. The increasing adoption by corporations and the development of Bitcoin-backed financial products further validate this narrative. The debate around Bitcoin's role in the global financial system is evolving. Once dismissed as a niche digital curiosity, it is now being seriously considered as a critical component of a diversified investment portfolio, particularly for its role in safeguarding wealth against the timeless threat of currency devaluation. This powerful hedge against fiat erosion is a major story, but we're not done yet. Prepare yourself, as we uncover market sentiment signals that could be presenting a unique contrarian opportunity. Bitcoin market sentiment signals a potential contrarian opportunity. In the dynamic and often unpredictable world of cryptocurrency markets, understanding sentiment and positioning is crucial for navigating potential investment opportunities. Recent analyses of Bitcoin's market conditions are highlighting specific imbalances that could indicate a contrarian play, suggesting that current market sentiment might be setting the stage for an unexpected upward move. The core of this analysis revolves around identifying extreme sentiment levels and positioning imbalances among market participants. When sentiment becomes overly bullish, often accompanied by high leverage and crowded long positions, it can signal that the market is ripe for a correction, as there are few buyers left to push prices higher. Conversely, extreme bearish sentiment, with widespread shorting and capitulation, can indicate that the market is oversold and poised for a rebound. Current data suggests that while there might be pockets of optimism, the overall positioning in the Bitcoin market is showing signs of being stretched. This could manifest as an over-reliance on certain narratives or a concentration of capital in specific trading strategies. When a majority of traders are aligned in one direction, it often leaves the market vulnerable to sharp reversals if unexpected news or events occur. The Contrarian playbook suggests that the best opportunities often arise when market participants are excessively fearful or overly confident. By identifying these extremes, savvy investors can position themselves against the prevailing sentiment, anticipating a reversal. For Bitcoin, this could mean looking for signs of capitulation among weaker hands or recognizing when bullish enthusiasm has reached a fever pitch, indicating a potential top. Analysts are scrutinizing metrics such as the futures basis, options skew, and social media sentiment to gauge the prevailing mood. If these indicators point towards extreme positioning, for instance, very high open interest in futures contracts or a significant bias in options pricing, it can signal that the market is due for a shakeup. A contrarian investor would then consider taking a position opposite to the prevailing trend, anticipating a move that catches the majority off guard. The implications of such a contrarian strategy are significant. It requires a disciplined approach, often involving entering positions when sentiment is at its worst, which can be psychologically challenging. However, the potential rewards can be substantial if the market indeed reverses course as predicted. This analysis is particularly relevant for Bitcoin, given its history of sharp, unexpected price movements. The digital asset's volatility, while a risk, also creates opportunities for those who can accurately read the underlying sentiment and positioning. Market participants are keenly observing whether the current indicators are flashing red for contrarians. If extreme bearishness is present, it might suggest that the market has absorbed negative news and is ready for a positive turn. Conversely, if the market is overwhelmingly euphoric, it could signal an impending correction, presenting a shorting opportunity for contrarians. This approach emphasizes the psychological aspect of trading and investing, suggesting that market prices are not solely driven by fundamentals, but also by the collective emotions and expectations of participants. Identifying these emotional extremes is key to unlocking potential contrarian plays. This intricate dance of market sentiment is fascinating, but our journey through the latest crypto news isn't over yet. We're heading into the final segment, where we explore Ethereum's potential trajectory for 2025 and how it might echo Bitcoin's past breakout moments. Ethereum's 2025 bull run, could it mirror Bitcoin's 2020 breakout? As the cryptocurrency landscape continues to evolve, attention is increasingly turning towards Ethereum's future performance, with many analysts drawing parallels between its potential trajectory in 2025 and Bitcoin's pivotal breakout year in 2020. This comparison is rooted in several key market dynamics and technological advancements that could propel Ethereum to new heights. Bitcoin's 2020 performance was characterized by a confluence of factors, including the halving event that reduced the rate of new Bitcoin creation, increasing institutional adoption, and a broader macroeconomic environment that favored alternative assets. Following a period of consolidation, Bitcoin broke through its previous all-time high, initiating a significant bull run that captured global attention. The narrative then shifted towards Bitcoin as a legitimate digital store of value. Ethereum, currently undergoing its own major transition with the ongoing upgrades to its network, particularly the move towards Ethereum 2 and sharding, is arguably at a similar inflection point. These upgrades are designed to significantly enhance scalability, reduce transaction fees, and improve the overall efficiency of the network, making it more attractive for developers and users alike. The successful implementation of these upgrades could unlock substantial demand for ETH. The potential for a 2025 bull run in Ethereum is being fueled by several factors. Firstly, the maturation of the Ethereum ecosystem, with its vast array of decentralized applications, dApps, DeFi protocols, and NFTs, continues to drive utility and demand for ETH. As these applications grow and attract more users, the underlying value proposition of Ethereum strengthens. Secondly, the anticipation surrounding future network upgrades, such as further sharding implementations and potential Layer 2 scaling solutions, could create a positive feedback loop. Investors may begin to price in the expected benefits of these advancements well in advance, similar to how the market anticipated Bitcoin's having impact. Thirdly, the broader adoption of digital assets and blockchain technology across various industries could significantly benefit Ethereum, which serves as the foundational layer for much of this innovation. If mainstream sectors continue to embrace blockchain, Ethereum's role as a dominant smart contract platform positions it favorably. Market sentiment appears to be building around these possibilities. While Ethereum has historically followed Bitcoin's lead, there's a growing belief that it may soon carve out its own independent growth narrative, driven by its unique technological advancements and ecosystem expansion. However, the comparison is not without its caveats. The market conditions in 2020 were distinct, and regulatory landscapes have evolved. Furthermore, the success of Ethereum's upgrades is contingent on continued flawless execution. Nevertheless, the potential for Ethereum to replicate Bitcoin's 2020 breakout success is a compelling thesis that is capturing the imagination of many in the crypto community. The impact of such a bull run would be transformative for the Ethereum network, its developers, and its investors, potentially solidifying its position as the leading smart contract platform and a major digital asset in its own right. And that wraps up our deep dives for today. What an incredible ride through the crypto landscape. But before you go, let's hit you with a super fast recap of all the biggest stories we covered. All right, crypto crew, that was a whirlwind tour of the most critical updates. We saw Bitcoin whales strategically taking profits while rotating into Ethereum, signaling a potential tactical shift. Then, we explored Bitcoin's growing role as a vital hedge against the constant erosion of fiat currencies, cementing its institutional appeal. We also uncovered fascinating market sentiment signals that could be pointing towards a contrarian opportunity for astute investors. Finally, we looked ahead to Ethereum's potential 2025 bull run, drawing exciting parallels to Bitcoin's historic 2020 breakout. Don't miss out on any of these crucial developments. If you found this information valuable, please smash that like button, subscribe to Bitcoin Bulletin for more in-depth analysis, and hit the notification bell so you're always the first to know. Also, check out our social media channels for real-time updates and join the conversation. We'll see you in the next one.